Are you like most sales and other professionals who want to grow their wealth faster than what they are currently doing through their company 401k, even with that company match, the stock market, or just plain saving money? Would you sleep better at night if you had the financial freedom to be job optional in just 3 to 5 years through investing in real assets? Maybe you don't want to stop working, but wouldn't it be cool if you could retire a decade earlier than most and do the traveling you and your family have planned for years while you're still young and can enjoy it? Let's face it, most busy professionals don't have the time or desire to take on more work outside of their W-2 to grow their wealth. On The Wealth Flow, each week we share the stories, the investments, and take a deep dive into the various asset classes that can deliver that accelerated growth to your portfolio passively. That's right, no extra work for you. Instead, we'll put your money to work. Learn what the 95% aren't talking about and join the top 5% of earners today on The Wealth Flow.
All right, welcome to The Wealth Flow. My guest today is Matt Aitchison, also known as Matty A. He's a hotelier. He's an investment syndicator, sought-after speaker, and in the real estate industry, and began his career as a realtor and built a top 1,000 real estate team that was ranked by the Wall Street Journal. So kind of amazing there. I'd love to hear about that. And then he's transitioned into real estate full-time as an investor, has flipped homes. He's done wholesaling. He has scaled his passive income portfolio, which is comprised of retail centers, medical plazas, single families, laundromats, apartments, and hotels, which is what he primarily focuses on now. So, Matt, welcome to the show.
Keith, it's great to be here, brother. Thanks for having me on.
Yeah, I appreciate. I've been, like I said before the show, I've been looking forward to this one. I love the hotel stuff, and so just really want to dive into that a little bit. But before we get there, why don't we start with kind of your background, where you grew up, and what led you to real estate?
Yeah, I mean, I stumbled onto real estate in kind of an interesting way, to be completely honest. I never really thought I would get into real estate, but it was about when I was like 13, 14, both my parents, I'm the first entrepreneur in my family, and both my parents, they were corporate America. And my mom had always wanted to get out of corporate America. So she was always going to personal development conferences and going to real estate investing conferences. So she started dragging me along to those conferences when I was like 12, 13, 14. So I got some pretty cool early on exposure to, this one, entrepreneurial lifestyle, two, a positive mindset, and kind of, the personal development space. But that kind of lay dormant, for some time in terms of I was going to those things, but obviously not doing anything. I was, still in middle school, I think is when I went to my first one. Then obviously, some of those in high school. Had a little bit of a turbulent start. I got arrested and expelled from high school and kind of course corrected a little bit. And then in college, had another kind of run-in with the law. And that was what I call, when most people ask me, like, what was your transforming moment that put you on this path? That was my moment where I was in a very pretty, dire circumstance in the sense of like my future was in major jeopardy, facing time in jail for years. And I kind of got a second chance there. And so I was going to school at that time at UC Santa Barbara. And as I, kind of got that second chance, I told myself, I wasn't going to waste it. And I think everybody kind of has some point in their timeline where they've looked back and it's been a very distinguished moment for they decided to do something differently than what they were doing. And I'd always kind of said I was going to be successful. I was, a charismatic talker. But my audio and my video really weren't aligned. I was somewhat of a fraud in the sense that I could talk, in public very well, but behind the scenes, I wasn't aligned. I wasn't in integrity with my word, myself. And eventually that is what led to kind of me getting in trouble and my downfall. And that was when I remember my one phone call was to my dad, and he wasn't going to bail me out. And I remember him saying, the decision that you make today going forward and how you proceed is going to tell me more about your character and your future than the words that you're talking through the phone right now. And that really stuck with me in a really big way and was kind of like a life-saving moment for me. And so as I got that second chance, I ended up working for an entrepreneur based in Santa Barbara for the 3 remaining years of school. I worked full time, kept my head down, stayed out of trouble. And that really gave me my first exposure to entrepreneurship. And he wanted me to take over his kind of book of business, selling insurance when I graduated from college. I knew I didn't want to do that. And I, still wanted to be kind of my own boss, no income cap, unlimited earning potential, something that was aligned with, the lifestyle and the sexiness of what I was looking for. But I also wanted to be in a space that allowed me to build wealth. And as I was doing more and more research with this expensive piece of paper that I had, called a diploma, what could I apply that to that would actually check all of those boxes on my kind of career hit list? And that led me to a Craigslist ad of all ads that got me started in real estate, which was, this was back in 2010 when there was foreclosures all over California post-financial crisis. And real estate mentor seeks real estate mentee. Long story short, I ended up interning for a guy for a year for free. I worked for him for free, probably 60, 70 hours a week. We flipped over 100 houses that year. I saw that he was clipping 50, 60, 70 grand a house. I was making $0. I was actually paying with my gas and my time and everything to go and make him that money. But it was one of the greatest learning lessons for me in terms of just over delivering on value with no expectation of anything in return. At that time, my expectation was just to have exposure and proximity to something that I really saw value in. And I'm a big believer that we grow into the conversations and the environments we put ourselves in. I know the conversations and the environments I put myself in previously that got me to being, the 10th person that, found some trouble. I also realized quickly on that when I got into the right conversations around millionaires and people building wealth and doing good things in their community and who took, care of their health and cared about their families and those kind of things, I also became the 10th person that started to adopt that mindset, those habits, those disciplines. And that really led me to my first real estate flip. And long story short, a couple hundred house flips later, I started building my flipping business. I started investing into a contracting company, which was kind of vertically integrated, being that I was doing a lot of business with a contractor. So I saw there being value in that partnership. Then I started, scaling and building my real estate team out with another business partner on that side of things. And then that way I realized that the single family real estate space was just not going to get me to the level of achievement, income, financial freedom, kind of the goals that I was looking to achieve for myself. And that's when I started making a pivot towards commercial real estate, which led me into, different commercial real estate assets, syndications, private equity, family offices, and ultimately finding my first hotel, which led into my second, third, and thereon. And I'm sure we'll unpack a little bit more of that today, but it has been a wild journey. And if you were to ask me, when I was interning for that guy for free and, really just thinking about, I want to be in the real estate space, saying you'd own hotels and own this and have done that, I would have told you you're crazy. And it's just the beauty of, the entrepreneurial journey, right? It's the greatest call to adventure I think any of us can probably incur in the professional space at the highest of levels, where you really learn who you are, what you're made of, where your weaknesses are, where your strengths are at, and honestly, what you're capable of. Because as you know, right, as a business owner, it's not for the faint of heart. There are a lot of failing forward moments, a lot of getting your ass kicked, a lot of your teeth getting kicked in. But man, those have been some of the greatest learning lessons and moments, that have really transformed me into who I am today, not just as a business owner, but as a father, as a husband, as a leader, for other people in my community and things along those lines. So I'm sure we'll unpack more of that today, but that's me in a nutshell.
There you go. Okay. Well, I'm. It's kind of crazy though that you worked for this guy as long as you did. I mean, to not be so short sighted to see, well, wait a minute, what am I going to get out of this? And having that opportunity, it really sounds like it was a good experience. And that you said was mainly with flipping homes.
Yeah, mainly flipping homes. And um, on that note, for me, everything that I do is with a crockpot mentality now, because I was young and I had some decent mentors early on in the game for me. One of the things that I knew about my, age demographic, millennials and younger, is we are very microwave mindset oriented. We want the click of a mouse and something to pop up like that. I want to put my dish in the microwave and I want it spit out hot and ready to go, tasting like a 5-course meal, in less than 60 seconds, right? We have built this mentality. And so I went, you know what? I've always been a contrarian in terms of like, hey, if everybody's over there doing this and thinking that way, I want to be over here. I'm an outlier. And statistically, I want to be an outlier in everything that I do. I want my finances to be an outlier. I want my marriage to be an outlier. I want to be considered one of the best dads on the planet. I want to be considered a great leader. So I knew that I always wanted to be an outlier. That being said, I also knew that it wasn't going to happen overnight with a microwave mindset. And the crockpot mentality is more so, as we all know, right? While it takes longer for that dish to really fuse together and create what we all know is a lot better than what the microwave is going to put out, right? Those ingredients take time, they take care, they take intention and purpose to kind of all metamorphosize into the dish that, we get to enjoy 8 hours later. And that's been my mindset with, my wealth building approach, my career, my relationships. And so I knew that if I was exposed to the right person with the right experience, the right reputation, the right knowledge, the right skill set, just by being in proximity to that, I was going to get that to rub off on me. And so I knew that I was willing to, grind. Honestly, I said I was willing to work for that guy for 2 years for free. However, I ended up finding my first flip by myself because I was doing all these flips and I was like, man, I can do this. But I was also still living at home. I was 21 years old. I didn't have any money to my name and I wasn't making an income. But I found my very first flip that I funded using 100% of other people's money. And I made after paying all of them out, I made 106,000 net profit on that first deal. And I was like, all right, dude, that second year working for you for free, I think I'm good. I got a little, money in the bank and I'm onto something here. So that's what kind of led me down my, my flipping path and betting on myself that I was going to be able to make that happen.
That's awesome. That's awesome. And so how long did you stay with the flips? I know you eventually transitioned out of that, but obviously making $100,000 on your first one, even after paying everybody back is huge. That would kind of solidify that for a lot of folks.
Yeah.
How long did you stay doing that?
So I still flip probably 3 to 5 houses a year, but really it's not an active operating or managed focused business. It's all through referral, kind of word of mouth, the network that I've built up over the last decade-ish of people knowing that I'm an active real estate investor, flipping houses, things along those lines. Because I was marketing and branding very heavy as a flipper for about 6-7 years.
Okay.
And so that still kind of has some residual every year by just being active. People will bring me a deal. Does this work for you? But I was flipping anywhere from 30 to 50 houses a year for about 5 years straight.
Wow. Okay. That's pretty powerful. Jeez. Did you, so you built up a team? Was it just you or you and contractors, or how did you get to that spot? 50 homes is obviously quite a bit.
Yeah. So that's kind of where the 3-stool approach came into the kind of the 3-prong approach came into mind when I was building this. As I was building up my real estate team, every time as I was starting to ramp up my flips, every time I'd get a flip, I would relist it through my real estate team. So I was like, okay, those are synergistic. Mm-hmm. And then as I started, doing more and more flips, I started calculating out, man, I just paid this contractor. Like he probably made it at a 20% profit margin. He probably made $500,000 off of me. Yeah. So if I were to go away, what does his business look like? So as I was working with this guy, and he was a younger guy, and we were aligned on values and vision and things like that, we partnered, and I helped him not only keep and retain all of my flipping business, but then I started funneling all of my traditional real estate clients and their construction needs and a lot of the other referrals of other investors in my arena that were looking for good contractors over to the construction business. So he tripled his construction company just by partnering with me, and it still made more sense. We were able to build out more leverage. So I was starting to look at how are all of these kind of businesses that I'm using. This was really just the Warren Buffett snowball approach, right? Is like, I'm the core tree trunk. What are all of these branches off of this business that I could own and take a sliver of that? Because I'm a big believer in it's better to own 100%, or it's better to own a slice of a watermelon than 100% of nothing.
Right.
And so I started looking at, off of these branches of my, investing business, what synergies and opportunities could we find a way to connect the dots on in a business capacity and still be able to control that process a lot better. So for me, it was all about, building out the flipping business through having an acquisitions team, which is really kind of the core team that was necessary. And then in the construction business, they were a part of my disposition team, because the second we bought a property, it got handed off to, Clancy, and Clancy would work with designer, stager, do permits, go through the entire scope of work process. And really, I wasn't stepping foot back on site until I was doing a walkthrough when it was staged and ready to go on market. And then I'd hand the keys off to Rachel and say it's ready to list. So that was kind of the goal and focus of building out a team that essentially, like clockwork, we're consistently bringing in leads and opportunities and moving those through the stage to get to a disposition, as quickly and efficiently as possible for most profit. So that's what that looked like, but it's also very labor and time intensive business.
Sure.
You're only as good as your last flip. And so as I started, generating decent income there, I started going, okay, I've got good vertical income, but I'm still trading time for money. And this machine requires, you to feed it every single day. What can I start to do in terms of, using those, income generating opportunities and potentially turning them into mailbox money and passive income? And so then I started going, every couple of flips, if this one makes sense, I'm going to hold it. And so I started holding single family properties here and there and started building up a single family portfolio. And then over time, I just started 1031 exchanging into duplexes and fourplexes and trying to kind of climb that ladder. And eventually, the fourplexes went into my first commercial strip center. And then the first commercial strip center went into, a medical plaza. And then I started kind of really focusing on what now has become my, $500,000 a year passive income plan that I've been focusing on for the last 5 years. And I'm about I'm about halfway there.
Okay. Fantastic. And all this was done in California?
Most of it was done in California, but I have stuff in Texas and in Kansas and Nevada as well.
Okay. Fantastic.
But at that time, it was mainly in California. Yep.
So you bought the one, just going back to the retail strip, you bought one. Have you bought any additional retail strip centers, or how's that work for you?
Multiple.
Yeah, that's all.
Yep. So my passive income plan kind of became this. And I think this is a good, exercise for anybody to do that wants to build wealth, generate passive income. When I talk with a lot of people and, I ask them what their financial freedom number is and what's your goal. And my goal when I was first starting out was just to become a 100%er. 100%er meaning 100% of my passive income that I generate from my properties covers 100% of my lifestyle and my living expenses. That's mortgage, date nights, cars, you name it, all in. This is my lifestyle. If I can get 100% of my passive income to cover that, then I'm essentially financially free, right? And so from there, I really started to think about, well, what do I really want my wealth building and passive income plan to look like? And when I ask this question to a lot of people, they just say, oh man, I would just love to make a little bit more money, or maybe this or that. Or maybe they say, hey, I want $1 million a year. Yeah. And then I go, okay, well, what does that plan look like? How are you going to get there? Most people have no clue. So then I started really kind of reverse engineering. Hey, if I want $500,000 a year in passive income, and my goal was, I'm 35 now. I started this when I was 30, this passive income plan focus. I said, by the time I'm 40, I want to generate $500,000 more in passive income than I have right now. So how do I do that? Well, my goal is to simplify this as best I can and say, if I were to just buy one property a year, not 20 or 30 or 50 flips, but just one property a year that I'm going to hold on to, how many properties am I going to buy over the next 10 years? Well, that's one property a year. That's 10 properties over the next 10 years. So I need to find a commercial property that nets me $50,000 a year, one time a year for the next 10 years. So then it became, okay, well, what properties net $50,000 a year in passive income? And that's ultimately what took me down the rabbit hole of doing research around the different commercial real estate asset classes, the different the different markets that those asset classes were in. And so that kind of led me to narrowing in on medical plazas and strip centers for the passive income. And I think there's two different types of passive income. There is true cash flow, coupon clipping, triple net passive income. You're really hands off. Mm-hmm. Or there's value add commercial real estate passive income that it still has a component of income tied to it, but you're really going to get in there and tool the asset up to generate more income and create and force more value into the asset. And so I kind of looked at two different, kind of verticals on that plan. That being said, over the last 5 years, I've continued to buy either one or two passive income assets that are either strip centers, medical plazas, or I've been in, a couple different syndication, opportunities on investments like laundromats and, apartment buildings and things like that you'd heard about, that were, tied to that $50,000 a year net passive income plan. So halfway there, I'm about in that range of a little past that mark of, I've gotten probably 6 properties over the last 5 years that all meet that criteria or better. And it's as simple as that, right? And so you don't have to have $500,000 a year. Maybe you just want 50 grand a year, 100 grand a year. But if you're buying single families that are only making you $200 a month, right, well, do the math. You're going to have a lot of single families to buy in a very short period of time that you may or may not actually be able to execute on that plan. So making sure that the plan and the number and the time frame that you want to get it accomplished in are actually reasonable, and you have a good logical strategy for how you're going to go about doing that is step number one. And then obviously it's just connecting the dots and getting heads down and getting after it, after you do that.
Yeah, for sure. And so what took you from the medical plazas, the strip centers to now hotels?
So the hotels came into the picture about 5 years ago as well. And this was brought to me through one of my social media followers. He'd been following me for a while, and he said, "Hey, I know you don't, invest in hotels, but this property is in foreclosure. It's in your neck of the woods. I know the seller, and they'd be willing to let it go for a discount, for a quick close." And I'm like, I can do that. That's what I do. Not thinking that, hotels are a completely different asset class. If you were to rank on the, let's just say a totem pole of top to bottom, top being the most labor, time, energy intensive, risk associated asset versus the bottom being the complete opposite, hotels are at the top, because it's a 24/7, 365 day asset that requires active management and oversight. You got bodies and people going in and out of your property every single day. That requires a team and a staff. So really, I didn't just buy a hotel asset, I bought a business.
Right.
And I didn't really think about it being an actual operating business. Airbnb, yeah, I could probably manage, a couple phone calls, and it's a little bit more labor and time intensive, but still manageable. Now you start layering in hotels with, dozens and dozens and dozens of rooms, associated with them, and the staff and the operations that go along with that. It became a real active operating business. So I bought that first hotel asset thinking I was going to flip it and make some good passive income. Quickly realized it was an active operating business. And I realized that in order to make it really profitable and really worth the time and the energy and the ass kickings that we were getting, I needed to scale it. Hence why I bought my second hotel, then the third hotel, because I really started getting more economies of scale with the systems and the team and the staff that we'd built out for our org chart. And I learned that I love, the hospitality space. I love not only that it has all the same benefits of real estate, your traditional real estate on the income and the tax side, but then it also has this lifestyle component that I really loved, which was I can go and travel and tour to the assets that I own and the locations that are, those are located in. The other side of it was I can take my wife and my daughters to those assets, and I have insane, epic experiences with my family because I bought those hotels that I would have never had while still getting all the other benefits that come along with it. I can't take them and tour my little, bottle shop, liquor store, or the dry cleaners around the corner of my commercial strip center, but I can take them to go and experience those. So that was something that really kind of came out as a silver lining in that. And just being able to know that you're providing other people with experiences and memories that goes beyond just commas, and dollars and zeros in your bank account. So for me, that's where I really leaned into hospitality. It became a passion of mine. Now we have, a full-fledged hospitality management and ownership company and business. That really is where I spend, if I'm trading time for money, that's where I'm spending most of my time right now.
Awesome. And where all are you buying properties right now?
Right now, the main states of focus, obviously California is my backyard. A lot of people don't like California. I've had every good and bad and horror story I think happen, or I've been exposed to it. So I know how to navigate this landscape, and I like the fact that a lot of people shy away from it. Nevada is, a state that I've been investing in for quite some time, probably the second longest. And then Kansas is third longest. And then Texas and Florida are kind of two new states. Tennessee is also another one that I'm currently working on some stuff in.
Okay, nice. And on these hotels that you're purchasing, you're doing these as syndications?
No, I'm not actually.
Wow, okay.
All of them have been private purchases. I have not syndicated any of my hotels so far. It's just been people that, the first one, I had a private lender that has probably funded over maybe 120-ish flips for me over the years. And they had a pretty nice, pile of cash sitting around that they helped me take that first one down with private money.
Nice.
And I renovated it. I stabilized the financials, and then I refinanced it with an SBA loan about two years later, and recapped the deal. Got all their money back to them, and then was able to kind of use that first, one as a good proof of concept. That then another guy in a mastermind group that I had liked what I was doing, was sitting on a bunch of cash, was like, "Hey, I'll help you, fund the next one." So he funded the next one, and then the third one for me. So it's interesting how, when I think back on a lot of the deals that I've done, I wouldn't have been able to do them without the relationships that I had. Because at the time, oftentimes I was out kicking my coverage. I was way out in front of my skis on paper, in the sense of, you haven't done these things yet, so why would we give you the money and take that risk to go on, that journey with you? And for me, it was people were willing to go out in front of my skis a little bit with me because of, one, my reputation, two, my track record of what I had done previously in the other areas, and just what I said I was going to do, I did.
Right.
And then the third piece of it is they while the deal in itself, is always something that people pay attention to, right? It's the person and the plan behind the deal that really matters. And so I was just overly prepared, planned out, and had such a clear vision and how I was going to execute on that vision with a quality team behind it, that I was able to sell people into that vision without actually even having success in it yet. And, the first kind of a funny story, that first hotel that I bought, that was through one of my private lenders. I started with $100,000 of their money and have probably ended up with about access to about $6 to $7 million of their capital now.
Wow. Okay.
And I remember sending them a mailer. I met them through a mailer because I was doing direct marketing mailers to people who owned rentals. I walked in one day, and this was, I think I was like 22 years old when I met them. I'm 35 now.
Hmm.
And I was in a suit and a tie because back then I felt like I had to dress up to
Right.
overcompensate for, my inexperience, right? And I walked into the house, and his name is Jerry. He was, they were kind of doing a renovation to get this rental property ready for market. Walk through the house with him, build rapport, all that kind of stuff. And, I'll, go back, crunch numbers and see about, making you guys an offer on this house. And he goes, no, you're not going to buy this house. And I'm like, what do you mean? He's like, yeah, we're not going to sell it to you. However, I do like you. And on your next opportunity, when we sell this house, I'll use the funds on this house to fund your next flip. So long story short, he ended up funding that flip for me. They gave me like 170,000 or something on a flip 13 years ago. And they've done over 120 flips with me now.
Wow.
That have made me a lot of money, all because of that one direct mail marketing mailer, building the relationship with the right person, adding value to them consistently, building that trust and rapport over time, the crockpot mentality. And they ended up funding my very first hotel flip, which they said they would never and have never invested or funded commercial deals. I got them to do that. And that one kind of fork in the road moment for me led me on this new path of hospitality, which I found out I have an ultimate passion for.
Yeah.
And I would have never had the opportunity to do that if they didn't fund that deal, or if I would have never sent them that direct mail marketing mailer in the first place. So long story short, you never know where one relationship, one person, one conversation, one mailer can completely change the trajectory of your life. And I would have never been able to connect those dots. Looking forward 13 years later, looking in the rearview mirror, it's pretty cool to see what kind of breadcrumbs you leave along your path of success and how those breadcrumbs actually get, connected to where you want to go. And oftentimes usually the root is going to be relationships.
Yeah. That's an amazing story for sure. How cool is that? And yes, I mean, most hard money lenders aren't going to want to jump out of their comfort zone and go with something different. But the relationship that you built there allowed that to happen. So that's cool. What about? Tell me a little bit about these hotels. Are these mom and pop type hotels? Are they branded hotels? What's the combination there?
All of mine are unflagged,
Okay.
unencumbered in management. So essentially, they're all boutique hotels that have been run by mom and pop operators, which is where I see the biggest opportunity right now, honestly. I think travelers and customers want more eclectic, unique, unbranded, uncorporatized experiences. And boutique hotels have the opportunity to provide that. However, most people, because the boutique hotels, for the most part, are too small for institutional capital, hedge funds to want to really put money behind. They want scale, and they're more okay with, clipping a 4 or 5 or 6% coupon on a stabilized asset versus me. I'm looking for, poorly run, poorly managed, poorly taken care of assets that I can go in and make pretty again, streamline the systems, the team, the operations, and stabilize the financials and the physical condition of the asset again, because that's where I get the most value and income upside. Most institutional players don't want to do that. So I think there's a really good opportunity in markets around the country for investors who have good operating chops, because that's where this all comes back down to is, you could have the best vision and the best design eye and all of those things. But if you cannot operate the asset, which is a beast, then it's not going to actualize on the pro forma. So that being said, I think those are some really great and exciting, spaces for investors in boutique hospitality assets in quality markets around the country, which we have a lot of those. And that was, really where I focused my market heavily was in Lake Tahoe. Year-round tourism, sun, sand, snow, a constant draw there. It wasn't heavily reliant on business tourism for the revenue tied to these assets. So those were, all that was kind of our model. I'd buy them, dilapidated, undervalue, off market, in distressed situations. We would go in there and completely rebrand them, completely renovate them, and then completely relaunch the operations team and the online digital footprint. And then we would stabilize, the value in the assets and either recap them or trade out of them into something else.
Wow. And what are the sizes usually of these? I'm sure it varies, but about how many rooms, how many keys, I guess?
Anywhere from 25 to 50 was
Okay.
kind of the sweet spot. And those are essentially, right in the range of getting enough scale to still be profitable, and not be the one cleaning the rooms and folding the laundry and doing it all yourself, which is what a lot of mom and pops do. So that's where you kind of have to figure out that sweet spot of scale, because if you go too small, you're going to be the one working in the business every day to be able to make, the money that you're trying to make. Or if you try and scale yourself out of it, then a lot of your margin and your profit is going to be going to paying leverage to, create that time freedom for you. Right. So
Right.
the 25 to 50, really 50 to 100 is kind of the sweet spot for boutique hotels. And it depends on if you're just doing, room revenue, heads and beds, or if you have the ability to start layering in food and beverage or events and
Mhm.
other things that you can monetize every one of those heads in beds beyond the room rate. That's where you can start, creating some additional programming in hotels that you can really increase the revenue per average customer.
And did you? I can't remember the time frame when you got into hotels. What was it before COVID? And if so,
Pre-COVID.
did you see anything with respect to? I guess yours are more destination areas. It sounds like
Mhm.
versus business travel, where I know business travel, completely shut down, or at least for a little while there it did. So
Yeah. Yeah. Mine was all well, I bought through the pandemic. I bought one in 2020 and I bought one in 2021. Um, I didn't buy anything last year. And through the pandemic, I mean, I thought I was going bankrupt during,
right.
March of 2020. I'm like, oh man, this is not good. This is not good for hotels. I'm going under. What was I doing? And I think that's also, when I look at and think of that, a lesson, at least for myself and maybe for other people as well, is there's a fine line between being considered crazy and reckless and being considered a genius and successful. Because March of 2020, I think a lot of people were like, that dude's crazy and reckless. Like, why did he do that? And when I, exited some of those hotels for multiple seven figures, people were like, man, what a smart dude that he did this and that. And I'm like, when people ask me, like, what did you do that made you so successful? And mind you, success is relative to each person. I've had moderate success compared to who I measure against. That being said, I have had some wins because of this one mantra that I live by. It's written on my mirror, it's written on my goal sheet, and it's, I am dumb enough to believe in myself and smart enough to take action on my goals every day. And when people ask me, like, what did you do to be successful? I go, every day I just wake up and I'm literally dumb enough to bet on myself every day. I will not choose anybody over myself. I'll bet on myself every day, 10 out of 10 times. And I am smart enough to take action on the steps that I've planned out that I think will help me achieve that goal. And then I just trust that if I put 100% effort out there every single day, wherever the chips may fall, whatever the scoreboard says, I can live with that. And that mantra has led me to going, hey, I'm betting on myself that I'm going to figure out how to learn from this house flipper, how to flip houses and make some money. And I did that. Hey, I'm going to bet on myself that if I use some of these proceeds to go out and buy rental properties, that I'm going to figure out a way to start generating passive income. And then I did that. Hey, I'm going to figure out that if I sell these things that are making me money right now, why would you sell those? I'm going to go and risk that to buy something bigger in a commercial asset that's going to make me even more money. And I'm going to trust that I can figure it out. And I did so, right? And so when I look at that timeline and I look at that mentality, I go, man, I wouldn't be where I'm at today if I didn't just wake up every day betting on myself and being smart enough to take action on the plan that I think is going to get me closest to achieving those goals. And so for most, that are thinking about where I'm at versus maybe where you're at, and maybe you're way further ahead than me, right? I think to me, it's just always a reminder that if you're clear on what outcome it is that you desire, and you have truly put in the time and the energy and the work to create a quality plan that feels logical, no matter how hard it might seem or how long it might take you to get there, and you just go out and you chop wood at that tree trunk every single day, you can trust in the process and feel good about whatever the results are based on the fact that you had 100% effort in the game when it came to that. So that's ultimately, where I have found myself today going, man, I thought I was going to be bankrupt in 2020.
Right.
And who knew that hotel values were going to, double, some of them triple, room rates and occupancies were going to go up 30, 50% over the course of 2 or 3 years. I would have, I couldn't bet on that. But because I was dumb enough to believe in myself and smart enough to take action, I got lucky, as some would say.
Yeah.
And that's, ultimately, I point to that one thing is, maybe it was luck or maybe it was something else. But that mantra is what put me in a position of being lucky, and me showing up and taking action is ultimately what led to the success that luck unlocked.
Yeah. That's awesome. And from a timing standpoint, kind of like you said, I mean, that's not necessarily a bad thing. While 2020 was probably scary, I mean, 2021, now people are traveling and they're trying to get out. They're tired of being, locked down. And I know at least with short-term rentals, it kind of went through the roof there during that time. This year's a little different. I don't know. What are you seeing this year as far as your hospitality stuff?
I mean, Lake Tahoe is it's somewhat of an anomaly in the sense of we have year-round leisure and travel. Occupancy rates and ADR have dropped a little bit, but for the most part, across the board, it's still been relatively healthy. And the fact is, again, our market's somewhat of an anomaly. One, it's a national treasure in terms of Lake Tahoe, and it gets people from all over the country and world that come to visit it. But then we also have really, and this is part of my criteria of when I look at hospitality assets and leisure markets, I want to have at least 2 to 3 really strong economies within a 3 to 6 hour drive of my location.
Okay.
Because if the pandemic hits again, it didn't really matter. People, instead of going, not flying to Italy or going over to Hawaii, were like, shit, we'll just drive 5 hours to Lake Tahoe, whatever.
Yeah.
So I like those kind of markets. And there's a lot of those markets in our country that have good, strong year-round leisure demand with strong drivable economies within proximity.
Awesome. And you mentioned earlier SBA loans, which, I hadn't even really considered that as being an option. Was that just that first one, or is that kind of the go-to?
All of them.
All of them. Wow. Okay. Tell me a little bit about that. Maybe if that's changed at all, now that some of the debt is kind of tightened up just a tad. How much down is there an opportunity to finance repairs? What does SBA's programs look like?
There's a lot of different SBA programs out there that are really beneficial. If you're buying any real estate asset that has an operating business aspect tied to it, there's some really great options out there. So the products that I've used have been 7As or 504s. They also have USDA loans, which are, for more rural properties. Again, a lot of this debt is as good of debt as you can possibly get. It's high leverage debt though. So at a minimum, it's going to be 70% LTV, if not sometimes 80 or higher, depending on what the program will warrant. So if you're looking for a lower leveraged LTV type of loan product, you're probably going to have to go more conventional banks or credit unions and look at some of their lending options. But what I did, and again, I'm a really creative real estate investor focused mindset. So the first 2 that I bought, again, was private money. I borrowed for the construction funds as a part of that private money loan.
Okay.
I restabilized the asset, and then I recapped it with a 7A loan, which I didn't have to put anything down on it. Qualified for 7A after I had basically bought it for what it was. I inflated the value to here. I was able to get a new loan at 75% LTV. It cleared out my first plus all the construction funds, and it had some cash out on top of it. So I was able to, take some chips off the table, which juiced some returns there. And then, it was a fixed loan for, I think it's either fixed for 25 or 30, or it's ammed over 25 or 30 and vice versa. But still really good loan terms. And this was like, when it was like 395, something like that. And then the other one was a 504. That one had construction funds tied to it.
Okay.
Similar type of loan product, 20% down, fixed for 30, ammed over 25. And there were construction funds worked into that as well. And then the last one was a conventional loan. I ended up just doing a traditional conventional loan on that one.
Okay. So unlike some of the like apartment loan type deal, where regular commercial loan, I guess you could say, you don't have this deadline of 5 years, 10 years. You actually have it amortized out, and you can take it to term if you need to.
Yeah, I mean, depending on, because the SBA pairs it with a bank. So the SBA takes some risk, a bank takes a risk, and they do it together is essentially what that looks like. So depending on the type of loan product you get, some of them will have prepayment penalties in there. Some of them will have resets after, 5 years. So you do have to, and you can look at the different products that are out there. But yeah, the ones that I did were not that.
Okay. Very interesting. So one other question with respect to hotels, just, what are the things that you're mainly looking at? Just mismanagement, deferred maintenance, and I guess what are a follow up to that would just be, what are some of the, the first levers that you pull in order to kind of turn it around?
Yeah, I mean, I think if you're just looking at a pro forma, and just looking at the P&Ls, it's always looking at where can I drive revenue and where can I lower expenses? I mean, as simple as it gets, right? Because in commercial real estate, the value of those assets are determined based on, net operating income and whatever the comparable cap rate is for that type of asset. And again, most of my stuff, right, I want to buy unstabilized at a really high cap rate based on its actual income. And then I want to find ways to drive that income, lower the OPEX, stabilize the net operating income, and essentially get it as streamlined and turnkey of an asset as possible to compress the cap rate and optimize the value. And so those are generally what we're always looking at. And it's usually on the operating expense side. There's definitely, through prop tech and technology now, ways of streamlining some very inefficient aspects of mom and pop hotel operations. So that was definitely one way we dropped OPEX. And then it was just creating so many people try and do all the fancy bells and whistles and make it all as sexy as possible. I think you need to know what your brand identity is first, right? Like, I knew that I'm not a Ritz-Carlton. I'm not a Hilton. I'm not a SLS hotel. We're not a luxury brand. So I'm not even going to try and pretend and or set our operations, our marketing, our product up to be that. We're a roadside motel lodge made cool again, right? That's eclectic. It's clean. It's refreshed and renovated. So people came to know our brand is we are tech driven. We like to create contactless experiences with great world-class customer service. And then the third piece of it was we provide you with clean, comfortable, and cozy rooms.
Yeah.
That's it. I mean, that's as simple as it was. People just want good Wi-Fi, good sheets, a good bed, right? Hot and cold water, and good quality customer service if and when they need it. Otherwise, that was something that we realized we didn't need to do overkill on. So we needed to get clear on what our brand was and what our brand promise was, and make sure that our infrastructure, our front of house and back of house mirrored and matched that. And that's what allowed us to kind of carve out and create a good brand within our market that we became known for, and kind of, started to really take on a life of its own. So I think that's something that's really important from that perspective. So that way you don't overdo things. And, just like flipping a house, right? Like I could do the windows and I could do the roof and I could do X, Y, and Z. But if every comp that's selling for top dollar doesn't have new windows or new roof, why am I going to spend the money on it?
Right.
So that was something that we really, took into account when thinking about how to set up the assets. But overall, I think it's important for, people to go in, do your due diligence and looking at the asset, identifying where can you, raise revenue. And for us, it was occupancy was low. How do we drive more heads and beds? It was making sure that we had a good, clean product, clean brand, customer service, right? All the stuff that we talked about. And over time, that raised our occupancy up, which drove more revenue. And we were able to, create efficiencies and streamline expenses, dropping more profit to the bottom line and maximizing the value. If you have the ability to add in other revenue verticals, right, that's always something to look at. But understanding that really every revenue vertical within a hotel has some type of business plan or model behind it that's going to require some level of service or bodies tied to it. So just thinking about how, every revenue stream in a hotel, there's going to be some department or COGS, expense tied to it to deliver that service. So that's something to keep in mind, because sometimes more isn't always better.
Right. What are some of the ones that you have used as far as verticals that you can put into the business plan?
Yeah, I mean, I think a lot of people don't have. Again, you want to just think about every customer that's on your property. Are you just collecting money from them because they're laying their head on your pillow, and that's it? Or are you collecting money when they lay head on your pillow and they reach into your fridge and grab something out of your mini bar?
Okay.
Oh, and if they also want to go outside to the little general store and pick up a couple bags of chips and some this and that, right? Oh, they want to book this potential event. Right. So it just depends on what your asset and how it's set up actually allows and, can warrant. Because one of my hotels, we couldn't add anything beyond just heads and beds. It was just, we're going to give you a great contactless experience. You're going to stay here. You're going to have great customer service, clean product. And, we wish you all the best on your travels. Others, hey, come into our general store, have happy hour. Here's a 10% coupon at our bar. Hey, have you wanted to attend one of these events that we're hosting on site? Sign up today, right? Like there's a lot of different programming that you can think about in terms of hotels based on what your asset warrants. And some just don't have the capacity based on the way their hotel is set up to add anything else beyond just room rates.
Okay. All right. I know we're running just a little bit long, so I want to be respectful of your time. As far as where people can find out more about you.
I am on my podcast 3 days a week, Monday, Wednesdays, and Fridays, Millionaire Mindcast. We've been doing that show. I'm going on 7.5 years of that show, anywhere from top 100 to 200 investing and entrepreneurship podcasts. So you can always listen to me on Millionaire Mindcast, or all my social platforms are the same, at official Mattier. Mattya is my handle. You can always reach out to me there.
Okay. And you've already dropped a ton of good nuggets here, but I just want to hear, if somebody that's just starting out, what advice would you give them?
I think it all depends on what they're solving for. Somebody starting out, looking to become a flipper is going to be different advice than somebody starting out that, wants to buy their first commercial property. So I think that, that end game kind of determines what advice I would give them. That being said, one thing I always share with people is the more likable you are, the more deals and income you're going to make. And everybody has the potential to become more likable. And I kind of boiled it down to this formula, which is humility is number one. The people that don't read their own press clippings, don't think they're, the best thing since sliced bread, and have this sense of humility to them, even if they are bad, even if they are insanely awesome, they still have this sense of humility. It makes them very likable.
Yeah.
The second piece is if you pair that humility with confidence and in a humble way, right? Humility plus confidence plus the last piece, which is hard work. If you show up humble every day, confident in your ability to deliver and add value to people, and you work your off on that every single day, that makes for a very likable person. And when you display that to more and more people, whether directly or indirectly, it's going to open up more opportunities, more relationships, more conversations, and you never know where those will go. And I'll close it out with this backdoor loop. Remember the lender that I told you about when he said, I'm not going to sell your property,
Yeah.
You're not going to buy my property. He said, but I like you. I like you. And therefore, because he liked me, he gave me $100,000 that ultimately led to me, long story short, buying my first hotel, which opened up a completely new path of passion and profit for me. And it all started with one guy because he liked me. And so I think this idea of being more likable by showing up with, humility, but also being confident in who you are and what you bring to the table and what you're capable of doing, and just knowing that, hey, I'm willing to work my ass off to get it. Those three things make a lot of people think of you in a way that I think can only be beneficial. The last piece of that, one little asterisk, is if you think about in each one of those qualities and characteristics, always finding a way to integrate and weave in value in what you do without any expectation in return. Humility, confidence, hard work, and always looking to add value makes you a very dangerous person in a great way. And so whether you want to be a house flipper, you want to buy commercial real estate property, or you want to go buy a business, or you want to do anything, I think if you can become more likable, you're going to unlock more quality opportunities to build relationships and get into conversations and opportunities that align with that.
Fantastic. I've enjoyed our time together. I got one last question. How about a book recommendation?
Oh man, I think I just finished the 10X is Easier Than 2X by Benjamin Hardy. That was a phenomenal read for anybody really looking to take that next quantum leap in their life or their business. And then I'm right now in the middle of Alex Hormozy's 100 Million Leads, which anybody that's looking to generate leads, and scale revenue and sales, it's a phenomenal book. His first book, 100 Million Offers, which was great. These two go hand in hand together, and I'm enjoying them a lot.
Awesome. Well, Matt, I sure appreciate your time today. Thank you so much for being on the Wealth Flow.
Thanks for having me on.
Being that you're still here, I trust you found value in this episode. I personally wish I would have known these guests and strategies when I started my wealth creation journey. Go to wealthflow.capital to subscribe to our newsletter. And as a free gift, we will send you our quarterly market report and the top 10 things to look for in an investment opportunity. Take a minute to give our show a rating and review. Help us reach 1 million professionals by subscribing and sharing this episode with someone you know who could also find value in it.